Hello, my name is Russell Myers, independent for U.S. President for 2024. Well, maybe you've heard of this and maybe you have not. As of Friday, the Silicon Valley Bank has been seized by federal regulators at the FDIC, Federal Deposit Insurance Corporation, because of loss of assets. Now, how did this come about? Well, you can look into this in more detail, but a large part of this is being blamed on interest rates going up, which drove down the returns on U.S. Treasury bonds. The bank held a number of U.S. Treasury bonds and lost $1.8 billion, but they had over $200 billion in assets. So I don't tend to believe that. There is also the issue that in the past year or so, they had an influx of capital investment and basically put half of that capital investment into mortgage-backed securities. Now, this is a bank that focuses on small business tech startups. So this is a very large event. Whether you have heard of Silicon Valley Bank, which many people have not, or you have not heard of them, this, again, is a large event. How many people had heard of Washington Mutual or Bear Stearns before the financial collapse of 2008? In 2008, the Washington Mutual was the largest banking collapse in history. And now the Silicon Valley Bank is the second largest bank collapse in history, not U.S. history, world history. So this is huge. So according to Reuters, the main office. Let me go back just a little bit here. On Friday, of course, it was announced on Friday. It's always announced on Friday. Depositors tried to withdraw their money, and this bank didn't just hold business accounts, but small businesses to tech startups and individual account holders. They tried to withdraw money on Friday or pay their bills, and their assets were frozen. Imagine that you try to go buy groceries, you try to withdraw money, and your transaction is declined. Doesn't matter how much money you got in the bank. Your transaction is declined. What are you going to do? A lot of tech startups and small businesses that had accounts with the bank are having problems and considering having to lay off workers. In some cases, the businesses have thought of laying off workers, but they can't afford to, because to lay off workers, they want to offer a severance package, and they can't do that. Anyway, according to Reuters, the main office and all branches of Silicon Valley Bank will reopen on March 13th, and all insured depositors will have full access to their insured deposits no later than Monday morning, the FDIC said. Here's your problem. If you own a business, small, medium, tech startup, and you have, let's say, $1 million deposited in that bank, well, the FDIC only insures up to $250,000, I believe. So if you got $1 million in the bank, $750,000 of that million is uninsured. You just lost your deposits. So Reuters continues, but 89% of the bank's $175 billion in deposits, that's not their complete assets, that's just deposits, were uninsured as of the end of 2022, according to the FDIC, and their fate remains to be determined. Now, the FDIC is trying to find buyers for the assets of the bank, but that's highly questionable. So, another statement in the article by Reuters, U.S. banks have lost over $100 billion in stock market value over the past 2 days, with European banks losing around another $50 billion in value, according to a Reuters calculation. This goes further. The CEO of Silicon Valley Bank was a Class A director at the San Francisco Federal Reserve Bank. As of yesterday, Friday, he is no longer a director at the San Francisco Fed, but he was one of 3 finance executives representing member banks in the San Francisco Fed district. In other words, this director of a major bank was a bank director and a Federal Reserve director that sets federal policy on banks. So remember what happened in 2008. It wasn't just the failure of one bank that was the problem. It was the fact that the entire banking system is a house of cards, which is connected directly to the stock market. As banks, one bank invests in another bank. So other banks are invested in the Silicon Valley SVB bank. So I'll just say SVB from here. That means that they have lost assets, so their stocks are falling. The banks are also invested in the stock market. So one bank holds stock in another bank. People with, retirement accounts have the retirement accounts probably hold stock, which are invested in stock in SVB, and the other banks that are seeing a fall in their stock value. And this entire past week, the stock market, even prior to this, has been on a decline. This puts the Federal Reserve in a difficult position because they have been raising interest rates to try and rein in inflation, which has had very limited success. It is leading to mass layoffs. I think 243,000 layoffs or unemployment claims in the past week. But this just continues to expand. From Washington Mutual, we saw a domino effect, the house of cards, as that crisis led to the failure of other banks and other businesses and the stock market. People lost their entire life savings, and it just kept on going in a ripple effect, which affected the entire global economy. So banks, including SVB, are heavily invested in the stock market. If you have a retirement account, check your balance, because it has fallen in the past week. And by Monday, we have no idea, or Tuesday morning, we have no idea what that's going to look like. I have made the point previously that every financial crisis in U.S. history for the last 150 years has had its basis in the stock market. And with the stock market being so tightly, with the banking system so tightly entwined with the stock market, remember what happened in 1929. What caused the run on the banks and the start of the Great Depression was a fall in the stock market. The stock people knew the banks were invested in the stock market and were bleeding money, so they made a run on the banks trying to withdraw their deposits, and they were locked out from doing so. Remember in 2008, the too big to fail claims? This is a big question as to what is going to happen with SVB, because this is the second largest bank failure in history. Is this bank going to be declared by our Congress to be too big to fail? In 2008, the banks were bailed out, but the people on Main Street, possibly you yourself, you weren't bailed out. Again, this involves mortgage-backed securities. How many people are going to wind up evicted from their homes, foreclosed on? We're going to see the same thing happening again. I expect it. I already have policies up which are regarding ending the stock market as we know it and converting all stocks into bonds. So, because I already have that policy posted, I will refer to that policy for greater understanding, because I don't want to repeat the whole thing here. But I want to go a step further and suggest that we should create a nationalized bank. Now, I'm not saying that we should nationalize all banks. I am saying that we should have a national banking system. This has been suggested by other people, and it is a valid suggestion which should happen. Your deposits would be far more secure. Yes, there would be more restrictions on lending. The risky loans issued by banks or investments, however you want to call it, could be handled by the private banks, which obviously they're already involved in risky ventures, while the national banking system would handle more secure loans and etc. Under a national banking system, large loans would not be issued to financial firms or corporations for the purpose of such things as buying back their own stocks, although, again, we need to eliminate the stock market as it is. And a corporation cannot buy their own bonds. A bond is a loan that is used for a certain purpose. Again, so loans from a nationalized banking system would only be issued to businesses for the purpose of such things as capital investment, expanding operations, etc. These steps, eliminating the stock market and creating a nationalized banking system with more stringent rules, would help to stabilize the U.S. economy. And, depositors, their deposits would be far more secure, backed up by the U.S. government. This would force the private banking system to also implement far more stringent rules on their practices. This is a valid, suggestion, a policy proposal, and something that I would definitely work on. There are a lot of details that would have to be worked out before this could happen, but it's very realistic. A nationalized banking system to compete for deposits with the private banking system. So, what is going to happen from here with the collapse of SVB? Who knows? We're just going to have to wait and see, but I'm not expecting anything good to come out of it. Anyway, so please share this video, talk about these subjects, support my campaign however you can, even sharing my videos, my policies do help immensely. They help to draw attention to the campaign. And if you can afford it, please donate whatever you can to help expand my campaign. And I will catch you in the next one. Thank you very much for watching. I hope you have a good day.